Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today's November 10th, 2013, and today I'll cover a couple of pairs we touched on last week, just to do a brief recap, and then I'll also preview a couple of crosses going into the week. Now let's just start out with the Aussie Kiwi. Now this is a pair we were looking at last week, and we had it labeled as A, B, and then this would have been our larger C to round out that larger wave 4 that we have labeled in our daily charts. But as we saw, prices pushed significantly lower past that point of the beginning of that larger wave 1. So then we had to relabel. And then in relabeling, we saw that in all actuality, the impulses we saw was just the C wave of that larger A wave. So we have it at A, B, and then this is the C, so in the form of impulses. So that's C wave, and then now we got that correction. Let's give us that A, B, C downwards, and that A and C wave are actually equal in length, so 100% extension. And then we saw that it landed at that 61.8% mark, also finding support at this ascending trend line. So this is a good pair to look to get long at this point. So you can look to get long at that point or a tad lower. Good entry levels would be at that 1.32 mark, so about 40 pips lower. And then you can look to run this pair up, as our targets for this are set at 117 and 120. See, 117 would be 100% extension, and that 120 mark would be that 1.618% extension. So shift gears over to the Aussie dollar, another pair we touched on last week. Did a video on this one, and this pair we saw that we had that AB, that 1, 2, 3, 4, 5 count upwards rather, and then we're currently in that ABC format, that corrective phase. Now with the Kiwi, which I'll cover next, the Kiwi corrected within the corrective phase. The Kiwi went to that 61.8% mark, so it corrected 61.8%. It definitely was anticipating this with the Aussie, but we did not get that with the Aussie, so it just came to that 38.2% mark and then started to fall. So it broke below this ascending trend line, so definitely the outlook for this pair is downwards, and targets for this would be set at 92, which would also line up with that 61.8% fib for that 5 wave count upwards. Let's just touch on the Kiwi real quick. And the Kiwi, as we saw, unlike the Aussie, the Kiwi retraced to that 61.8% mark. So came to the 61.8% mark and then started to fall. Now, definitely expecting similar results with this, so I'm expecting a 100% correction for that wave A. So that would put us at about 0.805. So you can definitely look for shorts on a break of this horizontal trend line and a retest. So look for shorts at about 82 with the target set at 0.805. Though I will not rule out a 161.8 extension, which would put us about that 76.4% mark, right around 79. Another pair I want to touch on is the dollar yen. Now the dollar yen, the count was a bit off in this one. Now we have been showing that we have been in a corrective phase in that dollar yen, and as we see, we have a larger A wave, and then now we're working on that larger B, that current cycle. But for the sub waves, we had A, and then initially I had this labeled as B, and then this wave upward would have been our C wave. So within that C, this should have been 1, 2, and then we're working on that 3, that destructive 3 wave. But let me just jump down into 15 to get a better look. So this is that 1, 2, and then that destructive 3 wave that I previously mentioned. But as we saw, prices broke below that ascending trend line, and it threw the count off as we had this labeled as 1, 2, but then prices broke below that 2 wave, so had to revise the count. So now let's just jump back out on the hourly for a bit of perspective. So we have to revise the count at that point. So now I'm looking at two options. We're either witnessing a triple three right now. Before it was a double three, so it was that WXY, and then which would have rounded out that B wave, and then we would have seen that C upwards. But now it's looking like it might be a triple three, so a WX, Y, X, and then Z. So now we'll know if it's a triple three if we see a break of this trend line, this black dotted trend line. If we see a break above that, because the alternative could also be that the B wave is a contracting triangle. And if it is a contracting triangle, then we would see that it would be labeled as follows. It would be A here, then B, C, then a bounce off that upper bounds of the triangle would be D, and then we should see it push towards the lower bounds to give us E, and then prices would shoot higher from that point. So the key levels to watch would be the bounds of this constricted triangle for this pair. So a break above would then indicate that we're in a triple three, and then we could see prices push a bit higher and then push lower to round out that B wave, and then it would push higher in the form of impulses to give us that larger C, and that's what we would look to take advantage of in this cross. Okay, I want to take a look at the pound, and then I'll jump over to commodities. Now our count for the pound has been on the money so far, as in the beginning of the week, last week we took advantage of it downwards, and then in the beginning of the week we were anticipating that we would either see a 38.2% correction and prices would then reverse at this descending trend line right here, but a break above would signal that prices would push towards that 61.8% mark. So I definitely told you guys in that daily chart, I definitely told you guys to look to build in starting out at 1.604. So do a quarter position 1.604, then a quarter at 1.608, and then that final half a position would be at that 1.612 mark. Well, prices were just a tad shy of that, off by 2 pips, but it definitely corrected. So for you guys that did enter that half positions, you guys are currently up in those trades, and we're definitely expecting pair to push lower. So for you guys that are half position in, you can look to add to that position at a break below that 1.59 level or this horizontal trend line. And for you guys that did not get a chance to enter, you can also look for entries upon a break of that horizontal trend line and look for pairs to push lower. Now initial targets in this are set at 157 and 155.5, as they both represent 100% and 1.618% extensions of that larger wave 1. Definitely expecting a move towards that 1.555 mark though. And then let's just end off with looking at the futures. Let's just start out with copper futures. Now this was something I touched on beginning of the week in that video, and we definitely was expecting prices to push lower and break this ascending trend line, but at the time we had this labeled as wave 2, as we saw that this wave C, the subwave C, had a 61.8% relationship with that larger wave A, which I found rather interesting, and also found support at the trend line. But I definitely expected that prices would push lower and give us a 100% extension, which would be now slightly past that ascending trend line. And also that would line up with the 61.8% mark of that entire wave 1. So definitely looking for prices to push to that level to round out that wave 2, so a 61.8% correction. And we did see prices break that ascending trend line, so definitely looking for it to push lower towards that point and then correct and go higher. And then lastly, let's just take a look at gold futures. And gold futures, we saw that we had the impulsive waves going upwards, and we were expecting a bounce higher off the 50% fib, but we did see prices push lower below that on the non-farm payrolls. So prices did push lower on the non-farm payrolls, and now it's currently at that 76.4% mark. So should expect to see prices push higher from this point, though I would not rule out that it push lower, and this is why. As we see, prices are at that ascending trend line, so we could see it go towards that ascending trend line. But if we do see a break, I'm anticipating that it will be a double bottom. And reason behind that is that, as you see, then this would be the A wave, this would then be the A, and then this would be the B, which would be a 61.8% correction, and then this would be that C wave, which would have a 61.8% 61.8% relationship with that larger wave A. So definitely will not rule out a move towards that, and then that would be the wave B, and then we would see that larger wave C take off from that point. So the gold futures is at an interesting place this week, as we could see a bounce off that 76.4% mark, or we could see it go towards that ascending trend line, or make a double bottom with the recent low and take off from there. So for you guys that are not in this pair at the time, you can either look to build in, starting out at that 76.4% retracement, and then so on. So the 76.4, then the trend line, and then with the double bottom, and then stops below that 1240 mark, and look for it to go higher from there. So thanks for watching today's video. Any questions or comments, definitely feel free to jump in the chat room. Paul or myself will gladly assist you with any questions or comments that may arise. So thanks for watching the video once again, and anyone trading, have a safe week trading and good luck.